So today we are going to cover international stock trading, and the topic of today is how global markets works. The stocks, what they are, what you start to gain, dividends, capital gains, introduction to ETFs, that is exchange traded funds, and the stock pricing. If we have more time, I will show you an example of how international markets, they are affected by various factors. One of them is what is currently happening in Iran and Israel. So hopefully we have enough time to cover all that. If you have any question, just put on chat. We'll cover at the end. So let's start. So how stock markets operate globally? A stock market is a marketplace where buyers and sellers trade shares that are listed. Just similar to what NSE happens. You have a company listing through an IPO, then they are listed on exchanges. There are several exchanges that AIB is offering access to. There is New York, there is also NASDAQ, among other exchanges. We'll come to that next week so that you get to know all the stock exchanges that we are covering, though we covered in the previous session. So a company is listed to those stock exchanges. Now, they list the shares that have already been floated through IPO. The people who bought during IPO may want to exit. So those are called sellers. They're the ones to sell to you. Now you want to buy shares from that company. Now you come in as a buyer. The same thing that happens at NSE. So the sellers who got in through IPO want to exit. So they place their orders in the market. Then you want to come in. So you come and list your shares as a buyer. So you have buyers on one side and you have sellers. So what happens? The seller wants his money back. Remember, during IPO, the company wanted to raise, say, capital for growth. They have already used that money. The company cannot return that money to the seller. So what is the direct way of doing that? They come and place the order in the market. You as the buyer, you come and buy the shares from that seller. So them, they'll be removed from the register. They are no longer shareholder. They get money, which is paid now by the broker. You get the shares and you become the new shareholder. So you are paying somebody to exchange his shareholding with your cash. So that's how it operates, even in NSE. So the timing, usually it's 4:30 p.m. to around 11 p.m. Kenyan time. That's when most of global markets are active. So in US, we have sessions like the way we have pre-open, open, then closed in NSE. In stock, in global markets, especially US, they also have that period. Pre-market in Kenyan time is from 11 a.m. to 4:30. So in their time, it's 4 a.m. to 9:30 a.m. So there is a limited trading activity and not all platforms allow access. So during that time, you'll not be able to submit orders directly. In our case for AIB-AXYS, we receive the orders and submit them to the platform our provider have given. That platform allows us to place the orders, though there is no execution. Then regular trading hours will start our Kenyan time, 4:30 p.m. all the way to 11 p.m. That's when there is active trading. In US, it is 9:30 a.m. to around 4 p.m. So that is the main trading window, and that's when active trading happens, the buying and selling. So all the orders that were put in during pre-market will be submitted as the first orders. Then as a client, you can continue pumping the orders if you have access to the platform. And that's when now active trading happens. Then there is after hours trading, which Kenyan time is 11 p.m. all the way to 3 a.m. in the morning. there is low volume and low liquidity, because that's when the market is trying to balance the trading sessions activity. And you may note there is a wider spreads. Wider spreads, the spreads, as you see in the next screen, you have a buy price, let's say $140 US, 140 US dollars, that is the buyer. Then the seller, at that point, maybe it is 160. So the difference of 20 between the buyer and seller is what is called spread. So the wider the spread, the higher the risks. Why? You'll be paying higher cost as a buyer if you're buying at 160, because that is the current price for sellers. If you're a seller, you incur huge cost to sell at a lower price of 140. Whereas if it was a buyer at 140, if there was a seller at around 150, the cost is lower. The cost for buying at 150 is lower than 160, because there is that difference of $10. So that's what I mean. So riskier executions due to that wider spread. So that's on market hours. And also in NSE, if you're buying shares and you realize the spread, that is the top price at the buy side bids and the top price at ask, where sellers, is wide, no, you'll be paying higher cost. I hope that is clear. The smaller the spread, the smaller the cost. The higher the spread, the higher the cost. And the spread here is the difference between the top price on the bid side and top price on the ask side. Yeah? So let's continue. If you have any question, put on the chat. So then who are the key players in global markets? Just like NSE, there is an investor, that is you, the buyer or the seller. Remember, the seller is the one who have the shares, which they bought maybe through IPO or in the market, secondary market, after the shares were listed. Then you as the buyer, you want to buy. So the seller is selling his seat as a shareholder, and you want that seat. So you exchange money for the seat, but that goes through the brokers and the system. So the broker here now is the middleman who executes trade on your behalf. Remember, you can't access these stock exchanges directly. Even NSE, you can't trade directly. You need a broker. Why? The broker is the one to receive the cash, submit it to the custodian for settlement, then custodian will credit shares. Then on the seller side, again, custodian will pay the broker for the sale, for the money now received from the buyer. Then the broker will pay out to the client. So the broker mostly is on settlement. That's why you need them. It cannot be done by custodians or even the market, like in our case, NSE. So then we have the custodian who is safeguards your shares. In Kenya, it is CDSE. So we are mirroring that custodian as CDSE in Kenya. So they are the ones who hold your shares. Your shares are never held by the broker. They are held by the custodian. Then there is a market maker. They ensure there is always buys and sells prices by creating liquidity. In NSE, the buyers and the sellers offer the liquidity. Even in the international market, you find that, but in some instances, you find a market maker coming in to provide liquidity. That's why global markets are more liquid than NSE, because they usually have a market maker who provides the liquidity. That is, if there are no people buying, then they will come in and put orders. If there are no people selling, they will come and float the shares. So there is always that liquidity. So we go to, let me check whether there is any questions. Put on the chat questions and also on Q&A. So we have tackled shares. Shares, you're becoming a shareholder. You're a part owner of that company. And here, you have been buying individual stocks. We are talking here. We are talking about individual stocks. So there is something that is offered in international markets called ETF, exchange traded funds. Exchange traded funds, in a simple layman analogy is like a basket that holds many different shares or boards. So you have a collection of different shares: Apple, Nvidia, Google, packaged into one ETF, which you can buy as one unit. So you're buying different shares as one unit. We'll come to an example in the next screen. And you can have an ETF for boards. You have different boards packaged into one offering. Let's call it XXX, which you can buy as one unit in its price. So instead of just buying a single stock like Apple, Nvidia as a unit, you buy a piece of the basket, which gives you smaller ownership in many companies at once. I've given an example of Nvidia. You have Apple, you have Google, you have Meta. They are packaged into one. So you buy this package, let's call it NYS. So you are buying one unit of NYS, but within this one unit, you have a small unit of Nvidia, you have Apple, a small unit, you also have Google, and you have Meta. So you are owning a small unit of each, but as a one combined unit. So an ETF is like buying a fruit of baskets. So you have oranges, apples, bananas, mango, melon. They are packaged into one. So you have one orange put there, two apples there, one banana, I have melon. Then they are tied into one unit. So you are coming to buy that one unit. Now, different fruits as one unit. Whereas you'd have gone and bought an apple separately, an orange separately, banana separately, mango separately, and your melon separately. Here you are buying as one unit, all of them. Why is that the case? Why do you need? So an example, you have a S&P 500 ETF. So it S&P 500 index, it tracks top 500 companies in US. So you have Apple, Microsoft, Tesla, Amazon, Google. You are buying them as a unit. So buying one unit of ETF, you're instantly owning a small part of all the companies. Like now, the unit that is here, Apple, Microsoft, Tesla, Amazon, and Google, you buy it as a one unit. Let's call it SPY. So you buy one SPY, but within that one SPY, you are owning Apple, Microsoft, Tesla, Amazon, Google at once for that price. I hope that is clear. That's how ETFs work. It's a collection of many shares or stocks you are buying as one unit. So do they pay dividends? Yes, but not all of them. Why? Within this collection here, you may find Amazon have given a dividend and Google have given a dividend. If you bought as an individual unit, Amazon, you get a dividend for Amazon. You also get another dividend for Google. Now, if you're buying ETF, Amazon and Google dividend, they are combined. So the ETF will collect that dividend and distribute to you. Now, depending on the settings, it could be quarterly or depending on how it has been set. This dividend is credited, as we said in the previous session, it is credited back to your trading account. You can either withdraw that as a cash or reinvest. As we said on Wednesday, for NSE, always reinvest dividend. Why? That dividend adds more shares. And always target the shares that are offering dividend, so that the shares you have added with this dividend will show you another dividend. So you add more back with that now new dividend. Again, that correction with the new dividend will give you another dividend, bring it back, buy more shares. So you grow your wealth using dividend. Over time, you won't even realize you have grown above what you'd have expected. And for NSE, you receive dividend directly. Always deposit back Either you can put it to global markets, or you can move it to other products like bonds if it is some good amount. You can move it to your, let's say, if you have a core account or a fixed deposit account or a savings account, put there. All those interests you're earning from those accounts, when it matures, withdraw, come and buy something else, but don't withdraw full amount. Just withdraw what you need, return back portion of it back, let's say, to fixed deposit. It continues earning you interest, but this amount you have withdrawn, now come and put it in global markets and either a stock or ETF that is giving you dividend. When you receive that dividend, move it out, move it to NSE. Now you'll be revolving around your dividend, NSE dividend, interest. There may be a coupon from fixed income. Coupon is interest that is paid on bonds. Bonds is like a loan you are giving to government, if it is government bond. If it is company, they are called corporate bonds. So you are loaning them your money, but they be paying you interest. That you receive directly to your bank. With the now put it back to global markets. Now you revolve around without you putting a coin. You only put the first coin when you invested the first amount. So as an example, if ETF pays $1.5 per share and you own 10 units, then you just multiply price per share, then times the units of ETF you have, then you get the dividend that you get. But this includes the tax. It's not net. You have to factor 30% withholding tax for international markets. When it's 5%. Don't panic. That 30%, if you compare now with Kenyan 5%, there is a very huge difference. 5% in Kenya is Kenya shillings. 30% withholding tax is on dollar. So I know you say this 30% is very high. It is on dollar. It's not on Kenya shillings. It's charged on dollar, then you withdraw and convert. So it's a small amount. It's not that big. It's charged on dollar, then you convert it to Kenya shillings. For NSE, it's 5%, and the reason is it's charged on your Kenya shillings. So here we are dealing with dollars. For those who came in the previous sessions, and I've already uploaded that video on our YouTube. If you have not seen it, just check a link on our website at the global markets. So let's proceed. So why use ETFs when you can buy an individual stock? First of all is diversification. So one ETF gives you exposure to hundreds of global companies. As we've seen above, let's go back to one here. You're buying Apple, Microsoft, Tesla, Amazon, and Google as one unit. You're not buying individually. So you're exposed on each company. And what that means, if one company price goes down and the other one appreciates, you won't be affected as if you'd have bought individual counters. Let's take an example. Apple goes down. If you have bought Apple as a unit, you are actually incurring that cost directly if you are to sell. If NVIDIA goes up, you will gain using NVIDIA. But remember, on the Apple side, you lost because it was a unit. What if you bought them as a unit? It is averaged. You find the loss that you'd have incurred with Apple is minimized. But it also affects your gains on NVIDIA. Remember now, NVIDIA's gain will also be reduced. But it helps you diversify those risks so that you're not incurring cost on one or loss on one unit alone, while other units are gaining. You average that. So then there is a low cost. It's cheaper than buying each individual stock. Why? Let's take Apple. Let's, for argument's sake, it's trading at $400, and NVIDIA is trading at, let's say, $140. If you are buying one unit of each, Apple, you are paying $400 plus the levies. NVIDIA, you are buying $140. So you are incurring higher price for Apple and a lower price for NVIDIA. But when they are packaged as one unit, as I said, this price is averaged. So if you are to do mathematics, that is 540, it's coming to around 270. So you are buying this one unit of Apple and Nvidia at around 270. So you have reduced the cost of Apple downwards, but remember again, the cost of Nvidia have gone up from 140 to 270. But remember, you are buying as one unit. So there is that advantage of owning an expensive stock at a lower price when you use ETFs. And for those who are joining, ETFs, we have said, is a collection of many shares or stocks held as one unit, which you buy now directly from the market. Simple access. It is easy to trade like stocks. You just tell us, I want ETF, let's say S&P 500, one unit at this price. That's what we put in the market. You don't need to struggle knowing what is packaged inside. And you can buy and sell anytime. They have a high liquidity, just like stocks, individual stocks. And they are safe for beginners. Why? We have said what? You are buying at an expensive stock at a lower price. Also, when market, let's say one counter goes down, let's say as a beginner, you bought Apple and it went down, you are directly losing that money. But if it's packaged with other stocks which are gaining in price, that loss is recovered by the gain in other stocks because they are averaged. So you don't lose much. Actually, you may gain, because most of stocks, if you are buying from different sectors, you realize when one sector is affected and prices are going down, there is another sector that is going up. They also help track global economies. You can follow maybe economies like US, Europe, China, tech, healthcare. Those are sectors. So it helps you diversify. So as a summary, ETFs are easy, affordable, and smart way to invest, especially for beginners. You don't need to know what stocks are inside. If you want to know, it's always there on the web. One, you get instant diversification, potential dividends. Because when you're buying individual stocks, let's say Apple, Nvidia, Google, and let's say Google is the one that have given dividend, you're only gaining dividend with Google. What if the rest never issue dividend? You see, now when you're buying as an ETF, you are sure, even if one counter doesn't, you don't own that counter and it's the one that is offering dividend, within your ETF, if it is included, you get. Let's say I have Apple, Nvidia, and Google. I have not bought Microsoft and Meta, individual stocks. They offer dividend, Microsoft and Meta. Since I don't own them, I won't get dividend. What if there is for argument's sake, ETF for Apple, Nvidia, Google, Meta, and Microsoft? I'll buy a unit of each within that ETF. Even if I'm buying one ETF, I'm buying a small unit of each. So I'm entitled now to dividend for Microsoft and Meta without directly owning them. Then there's exposure to major companies around the world. And it's good for beginners, especially for those who want long-term investment and retirement plans. Remember, they are tracking different counters inside that ETF. So you'll always be making some gains. So that's on ETF. If you have any question, you can put it on the chat. Let me pick this as we continue. With Rocco example, who are some of market makers? At NSE, there is no market maker. The buyer and the sellers are the market makers. Market maker means I'm providing liquidity on the sell side. Liquidity is I'm providing shares to sell. Then on the buy side, I'm providing money, liquidity, money to buy. So there are people who are willing to buy, there are people who are willing to sell. In international markets, you will find in some cases, there are no people who are selling, but you find there are orders. That's when the market makers come in, and you can never see them, you can never know them. Even in NSE, you find, let me give an example, fund managers, when they want to give their orders, they can become market makers when there is no offers or demand. But in NSE, we don't have market makers. Market maker is on derivatives, where you find a broker, like recently Sterling were appointed as a market maker. Initially, it was AIB-AXYS before we stopped offering derivatives. So what Sterling will be doing, they are coming and floating positions for derivatives so that you are able to buy. They're also providing cash in case you want to sell. So they make sure there is always demand and supply. It's always there. So that's the role of market maker. In NSE, we don't have, but you really don't need to worry about them. Now for spreads is where, let me take an example. Let me stop sharing this so that I can show you an example of spread. Let me log into my DigiTrader account online portal. I show you from there, but this is NSE, but the same analogy applies on international stocks. I'll just pick a few, we continue, then the rest I will come and pick at the end. Logging in. So I'm on this screen for ABSA. This one, the one I'm floating here, the small screen. It's called market depth. You see the bid side, we have 300 shares at 18.6. So the buy side is 18.6. That is the top buy. On the sell side, we have 18.8. So you have buys on the one side, bids, top one, 18.6. On the sell side, offer side, you have the top price as 18.8. The difference here between the two prices, that is the top bid and top offer, is 0.2. This is what I'm calling spread. It is the difference between buyers and the sellers. The higher the spread, we have said, the higher the spread, be sure there is no huge activities on that counter. And the cost is also high. Remember, you are buying at a higher price, there is commissions to be paid, then there is that difference. So as a buyer, if you go to a counter, let's see whether we can get one counter with a huge, this one, the spread is 181, 186, around 5 bob. I don't know whether we can get most of them. I don't think. Maybe the ones which are trading at a higher price. 117, no. Let's see, BAT 350, just 10 bob. That's 1 bob. Today I don't have an example I can show you of how expensive stocks become when the spread is high. Remember, when you submit the order, it executes at the top price. So if you are buying or selling at on market, it will execute with the top price. Right now, we don't have any counter I can use as an example. Most of them, the spread is very low. But I hope now it is clear. The spread is the difference between the top prices on each side. The higher the spread, the more expensive the stock is. So always check that even at NSE. When there is a higher spread, be sure the cost that you pay. And also, you may find the counter now, the price goes down, the spread narrows. So you incurred a higher cost when you have bought at a lower price. So let me see if there is another question I can pick right now, then we proceed. I think spread is okay. Repeat that revolving bit of it. Now, revolving bit of it is where you're buying dividend stocks, stocks that are giving you dividend. You buy at NSE. That dividend will be paid to you as cash. Don't use that cash for other purposes. If you have extra cash, you can use. Put this dividend to international markets. You run a dividend, let's say on an ETF or a counter that have declared dividend. It's posted on your international trading accounts. You have not sold shares, it's only the dividend that you have reflected. Withdraw that dividend. If it is a lot of money, move it to bonds fixed income. You'll be paid coupons or interest, let's say in a few months, let's say 6 months. That amount you get, put it in money market fund and some interest. When this matures, let's say you have put for 6 months lock period, you withdraw. Return that money back to NSE. Then part of it, the interest in each. If you have extra, now put in a savings account. It could be a Jabo Junior fixed deposit or core account. When you earn interest, we withdraw it when it is due. Move it now to another investment. Let your money circulate within all investment products. Why? When NSE is down, international market may be up, you are still making money. If these two are affected, you have a fixed income. If 3 of them are affected, then you have money market and you also have savings. So you are growing your wealth and making sure your investment are stable. We'll come to taxes. Let's continue. I will come back to Q&A. We go now to stock pricing. Similar to what happens with NSE, there is no difference. So what determines a stock price? They are set by supply and demand. All the prices, both the NSE and international markets, they are set by forces of demand and supply. The higher the demand, the higher the price. Because remember, the sellers will withdraw back and you as the buyers will push the prices up. The higher the supply, the lower the price. The price will start coming down because people are willing to sell. It happens like that. The higher the demand, prices may go up. The higher the supply, prices may go down because there is a lot of shares in the market. And these sellers may be competing amongst each other who will sell first. So they'll keep on pushing prices down. Buyers, if we are many of us, we are pushing the price up. And even encouraging sellers to withhold shares. So that means the price can continue moving up. That's why there is always the 10% rule set at NSE, so that the price doesn't go up infinitely. So again, more buyers than sellers, price goes up. More sellers than buyers, price comes down. It's also influenced by company performance. If a company is making profit, you may find the prices will go up. If they're making losses, then you may find prices starting to come down. News and economic data, especially like what is happening in Iran and Israel. There's also what is it called? Russia and Ukraine. I think their war have been continuing for a very long time. You find there are sectors which are affected. The price goes down, and there are sectors that gain. In war, there are sectors that gain, like the ones providing ammunitions and anything to be used in war. You find now their prices go up. So it's not always that war have a negative effect on global markets. It's not like what happens in Kenya when there is instability, maybe because of demonstrations. You see NSE crashing down. For stock market, international, you find one sector gains, the other one is the one that is affected. Then there is global events and investor sentiments. Sometimes it is you as the shareholders and investors who push the prices up or down. By panicking, then it is spread across. Then everybody panics, they want to sell. As we have said, more sellers than buyers, price go down. Or sector trades and also interest rates. I don't want to go into details of this. They are covered at our research reports. So as it happens, NSE, what we have seen on the portal, and also what you usually see on app, we usually have bid and ask prices. And this has an execution impact. So you have bids on one side, and the top price on the bid is the highest price the buyers are willing to pay. Then on the ask side is the people who are willing to sell. And the top one are that queue is the lowest price sellers are willing to accept. And as we have said about the spread, the bigger the difference between the two, then it affects your cost. That difference is called the spread. So you as a buyer, you're buying at ask price, but you have an opportunity to put any other price on the demand side, but you're not guaranteed execution. The sellers, they will sell at the bid price. However, they can put any other price on the ask side. Wider spread means slow execution and higher cost. Slow execution because you find the bids, let's say, are at 18 and the sales are at 30. As a buyer, you won't be willing to buy at 30. You will wait until the sales come down to around 1920. That may take time. That's what I mean with slow execution. You may not get execution quickly. So if you find a counter has a wide spread, you either put your price or your shares in between the spread, or you accept the price on either side. But remember, higher cost because you're paying more. So the execution will happen when bids meet ask. A good example, like we did with NSE. Today, let me not use hawkers and trouser. Let's use a bread. You want to buy a bread and you only have 30 bob. Then the shop has the bread, you have 30 shillings and you want a bread. Then the shop has the bread, but they are willing to sell it at 50. Unless two of you agree, you as the buyer and the seller, you agree on the price. Trust me, you will not go with this bread, and the seller will be left with the bread. So it's either you agree, I will buy at 50. You pay the seller 50, go with the bread. Or the seller decides, since he has 30, let me just sell at 30. You release the bread and sell it to you. What that means, we have different orders in the market. We have limit and market orders. I'm coming to them in the next screen. So if you have put the limit where you are placing a price on an order, you have an opportunity either to lower that price or you just wait until buyers or sellers are willing to take your price. However, for the market, it's the same thing with the bread. Somebody else comes and they say, give me the bread, and they give 50. They have not quoted the price, they have just given money. The seller will give them the bread and the change. Those are called market orders. Well, you are not quoting a price, you are saying just give me shares at any price, or sell my shares at any price. So in international markets, same as NSE, we have market depth and order queues. When we bring it to DigiTrader, you'll be able to see market depth. But if you have access to international stock trading platforms that offer real-time prices, you can be able to find these. Market depth will show levels of buys and sell orders at different prices, because people put their own prices. They will be queued because they have not met either buy or sell, and wait for the market to reach their price. Remember, in every market, it's first in, first out. The first person who places the order is the first one to be served. Then we have a bid queue. Those are the people who are buying and waiting at various prices, same as NSE. On the market depth, there is a bid side. The ask queue are many sellers who are waiting and at different prices. So the use of market depth is helps you gauge demand and supply and pick a better price. So always check when there is more demand than supply, there is a possibility of prices going up. So as a seller, you can withhold your shares and wait for the price to go up. But also rely with research insights on the same counter. If there is more supply than demand, there is a possibility of prices going down. As a buyer, withhold your position, wait for prices to come down. But again, you need to track the performance of the stock for a period of time, let's say 6 months, then 1 year, then 5 years. You see the trend in price. Why? You find like a counter today is trading at 150, and that is the highest it has ever traded in the market. It is not guaranteed that counter will go above that 150. There could be possibility it will go down. So that's why you need to combine so many factors before you just decide on entering for a price. As long as, especially if you're doing short term or a speculator. If it is long term, then you don't need to worry. So the uses of market depth, it helps you to avoid overpaying. You might pay a high price, then the same day the counter goes down. Remember here we are dealing with these dollars. A change in $1, that's a lot. That's around 130 Kenya shillings. A change in NSE, it's just a sharing if it moves with one sharing. So you see now the difference between the two markets. In international market, a move by a single digit means a lot. You have gained 130 bob. While in NSE, a single move, you are gaining with the same 1 unit. So if you are placing large orders, it's very important to be cautious about the pricing. For small orders, you may not notice the difference. If you are trading low volume stocks, also pay attention to these. Low volume means counters that trade very low shares. The total shares traded for the day, they are very low. Be cautious. It tells a lot about that stock. People are not willing to sell, or people are not willing to buy. So you only need now to check research fundamentals and know why people are not willing to sell. Maybe there is material announcement out there, or they are withholding stocks or cash to push prices up or down. It happens. But that is not market manipulation, because it is you as a buyer who have that decision to sell or buy. Market manipulation is where you do it intentionally to move the prices. So then, how do you place the orders? When placing orders on global markets, you must decide a few things. Even at NSE, one of them is the stock you want to trade. That's very important. As an advice, never walk to a broker or call a broker and tell them, which stock do I buy? They will give you a list to choose from. Always check research information. See what have been recommended. Go to websites outside the broker, research. Like for international markets, you can use Yahoo Finance. There's also other sites. I will share in the description of the video on the YouTube. Once I share, just check on the description. I will share those links where you can get even various analysts analyzing a stock and whether their research have ever made any impact in the market. There are sites that do that. That will tell you that person who is doing that research is credible. The stocks they are recommending now come to the platforms. Within those links, they also offer the prices, check the prices. Also check graphs for the trades, whether the counter have been going up or have been going down, or maybe the current price is the highest it has ever gone. It tells you something. The probability of even going further is very low. The next probability is dipping down. So that's why you need to decide on what stock to trade. In Digit Trader and online portal, we have given you everything. You can see the prices and performance. On international market, there are sites which you can use on your We'll come to them next time. If I'm able to finish this today early, I will also go through them, so that you know where to get this information from. Once you decide on the stock, the next thing is to know, am I buying or selling? If you have shares and you have gained, because we are showing you profit every time you'll be getting those reports. If you have made profit, then it means you can sell if you want. However, if there is future growth for that company, don't sell. If you're entering into market, it means you are a buyer. Either you're entering at IPO or you're buying secondary market. As we said, for you to become a shareholder in any company, global or NSE, you either buy when they are listing through IPO, or you buy from the market for the people who want to exit. Remember, in IPO, you have given, let's say, NVIDIA money to expand. They have already used that money. You need your money. What do? You come and sell in the market to the willing buyer. They give you money, you give them the share. So at custody level, they are checked out as a shareholder, then you are onboarded as a new shareholder. But in NVIDIA have not refunded any money. They are continuing to invest. Then the next thing is to decide how many shares. The shares that you want to buy. How many do you want? That is dictated by the amount that you want to use. Then at what price? So you have the price and you have the money you want to invest. Divide the money you want to invest by the price. You get automatically the number of shares you need. So that's one way to decide the number of shares to buy. Amount you want to invest, let's say you have $10,000 and a counter is trading at 100. If you divide, you only need to buy 100 units of ETF or share. However, you can go the other way. You say, I want 1,000 units of NVIDIA. How much is it costing? $140. So you only need to multiply so that you need $140,000. So those are two ways. Even NSE, that's how you decide. Either the amount of money you have, you divide by the price of shares. You get the number of shares you want. Or you have exact number of shares you want to buy, you multiply by price. That will tell you the amount of money you need to put in. So that's how you make that decision. So we have market orders and limit orders. Market orders is buy and sales which execute immediately at the best price. Here you don't have control. You are saying, go in the market, buy me, say 10 shares of Apple at market price. That is, go to the sell side, the ask side, pick the prices from top downward until you fill my order. If I've given 1,000, pick the first one. Let's say the top one is 100 shares at 140, so it will be picked. The other one, let's say it's 1,000 shares at let's say 1,000 at 150. So you have already picked 100. So the next one, it's supposed to fill 1,000. So you pick a 900 out of these 1,000. So it on the ask side there will be 100 left at 150 still queuing. So that is the disadvantage of market orders. It clears everything either on ask or bid side, depending on the number of shares and the amount that you have put in. So you can even clear the whole queue. You clear all the shares on offer or all shares on bid side. A good example, you have several prices on the ask side. People are willing to sell and they are selling. The total quantity on offer is 1 million. You have enough money, but you could come and put 1 million shares to buy at market. It will clear everything because supply is there. However, if your order is not fulfilled for market order, it's usually cancelled for the balance. So market order balance is cancelled because there is no price to convert to. However, there is always something called market to limit. It means clear everything on say ask or bid side. If you are not able to fill my order completely, don't cancel my order, convert it to the latest price you have executed. So again, you have pushed the market prices up. That's why it's very important as an investor you check the orders you are putting. So there is market to limit. I didn't put it here intentionally because I don't want you to put market to limit. It's very risky. But at NSE, if you want to become a majority shareholder in a company, you can be using market to limit. You come and clear everything, then your order is queued. It means people who are willing to sell, they still come and sell at the price that is there for your shares. But it is risky unless you want to become a majority shareholder. So there is a fast execution, but price may vary slightly. Remember, you are clearing everything. So you find in your statement you have different executions at different prices. If you do the average, you find you have bought at a very high price. It's ideal when you want to get in quickly or get out quickly. Let's say you need shares. It's on dividend book closure date or ex-dividend date for international markets. You need to come and buy shares immediately. So you come and do a market order to execute. You buy immediately. You need money urgently. You can do a sell order for market if you execute immediately, as long as there is supply and demand. However, limit order is where you specify a price. You are saying go to the market, buy me 10 Tesla shares at 170. You have quoted a price. That's what is called a limit, and nobody can change that price. It's only you can come and amend upwards or downward, or convert the order now from limit to market. Now the downside of this, it may take longer to execute if you don't match the counter side. If you are bidding, if you don't match ask, remember you'll be queued, and in the queue there might be other people in front of you, and it might not execute at all if the price doesn't come down to your price or up to your price as a seller. So it's ideally for controlling costs, so that you don't incur huge cost when buying shares at a high price or selling shares at a lower price, or when you expect there will be either a dip in price or increase in price. You can put the highest price and wait. For international markets, they are very volatile, so limit orders work very, very well. You may find like NVIDIA opens at 143. The next minute, it is trading at 148. Then the next minute, it is trading back to 140. That's how these markets are volatile. So if you put your price high as a seller, 148, it will come and execute. What if you panicked and put the market, you'd have executed at 143? So you always check. That's why those graphs are very important. We'll come to them next time, because that's when we'll be doing practical trading. Today I need to explain everything in layman. So selecting quantity, as we said, now for the share, the offer we have introduced at AIB, we are dealing with 4 shares. 1 share of Apple, 5 shares of Apple, 1 million shares of Apple. So you are buying in full quantity. However, you'll be having fractional shares where you can buy a 0.5, a half share of Amazon. That is coming to DigiTrader. So those are the 2 ways you can trade in international market. Either as a whole share, you're buying 1 share, and it is allowed. Here we don't have odd lot or normal. The minimum shares you can buy for physical shares is 1. For fractional shares, you can buy a fraction of a share. Order size, there is no minimum. There is no minimum to number of shares you can buy. It all depends on the amount you have put. Remember, it is trading on dollar. So to get now the total costs, whether in USD or if you're in NSE case, you do the stock price, the cost, the share price, times the number of shares you are buying, then you factor out charges. In international stocks, it's only 0.8% commission. That's what you're incurring when buying or selling. So if you're buying, you add the cost. If you're selling, you minus, because you'll be paid less, but in dollars. So a good example, I want to buy global shares and I want to buy 5 shares of Microsoft. So first of all, I will need to select the stock and the market, the exchanges it is trading. Microsoft, NASDAQ. Remember these stocks, they are cross-listed. You may find Microsoft is in NASDAQ and New York exchange. And you want shares in NASDAQ, not New York exchange, for various reasons. We'll come to them next time why you need to select a particular exchange. So here you need, when you're giving order to us, specify the stock and the exchange. It's always there when you open those sites that I will show you at the end. Even on Yahoo Finance, they're always tell where this stock is. Then you decide whether you are buying or selling. That is the second step. The third step is the order type. Do you want a market? Buy for me these shares now. Or if it's selling, sell now. Or redeem it where you're setting price and say, put at this price, give it a validated date. It's called good till date. You give it a few number of days to be there. If you have seen on the graph that the counter is going up as a seller, you can put a higher price than give it about this. If you have seen the price is going down, you can put as a buyer low price, then you give it an about this. The order will be there, it will be refreshed every day without you having to come and put it in. Then the next step is number of shares. Let's say I want 5. So now it's confirming charges. So you already know what you are paying. That is the number of shares times price. Then you add the charges. Then the next step is the broker to execute through the global platform. So these orders you can send via email or via call. Once the execution is your trade is executed, the broker will share the execution, and from there you start tracking your profit through portfolio valuation, and you can track your dividend through the cash balance in your global markets report. And the shares will reflect in your global portfolio. And most of these exchanges settlements is T+2. But you'll be doing this when you are now going through individual exchanges, you'll see the settlement. But this you don't need to worry about it. I hope you're not buying to sell immediately. So we go to the next one. Understanding dividends in the global markets. Here we are dealing with something called dividend stocks. In any stock market, you have 2 types of stocks: dividend stocks and growth stocks. We'll come to growth stocks. Dividend stocks are stocks that issue dividends. So what is a dividend? A dividend is a profit payout from the company to its shareholders. So a company makes profit. So if you look at their books in their P&L, you find the company have made profit. That is profit and loss statement. That's what is called P&L. This is why you have expenses on one side and you have income on one side. So the difference between income and expense is a profit or a loss. If it is a positive, profit. If it is a negative, it is a loss. So if a company makes a profit, they might decide to give you that dividend. They might decide, to share that profit with the shareholders in form of dividend. And dividend is in many forms. It could be cash dividend, where they give you cash, or they give you in form of shares, where they give you additional shares. So again, dividend in form of cash paid to you, or in form of shares called bonuses. You find mostly in NSE that happens. And the frequency now will depend with the share, but most of them I've seen is quarterly. Like those who had bought in NVIDIA, dividend, I think it's closed. Was it on 15th? I believe so. So if you had shares by 14th, you already have your dividend. I will tell you why, how now dividend works in international markets. There are terminologies that might confuse you, but I hope at the end of this session, you'll be able now to differentiate NSE from global stocks. And not all companies pay dividends. Most of them, they are growth stocks, where they invest the dividend. Instead of sharing that with the investor, they invest themselves. So that comes to the next question. Why do some companies not pay dividend? They have made profit. They can decide, instead of paying this profit to our shareholders, let's expand our factory. They have reinvested that profit back, but the prices go up. Remember, any growth in a company signals stability, and that pushes prices up. So growth stocks are companies that are focused on growing fast, increasing their sales through the profit earned, expanding to new markets, and building products. Now using the profits instead of sharing as dividend. So instead of paying dividend to shareholder, they invest their dividend back to business to support their growth. The goal here for these companies mostly is to increase their share price over time, so that investor now gain with something called capital gains. We are coming to that. I had seen a question on capital gains tax and also dividend tax. This is the time to know it. So capital gains is where you sell at a higher price. Now you bought at a lower, you sell at a higher price. So the difference is what is called capital gains. Now we come to the dividend. Again, we are still on dividend. You are subjected to a withholding tax in US, as I said initially, 30%, but it is in dollars. So you don't look at 30% as if it's a lot of money. It is in dollar. It is applied on dollar, not Kenya shilling. Remember, your money is in dollar form until it reaches the AIB, and AIB converts or pays you in dollars. So at source, that's where dividend is taxed. They tax in dollars. That's why it's high, 30%. But if you apply in dollars, that is way low compared to if you are to apply this 30% in NSE. And it is for non-US residents. If you look at W8BN form, for those who do freelancing or jobs outside Kenya, or they earn money outside Kenya, you realize they tell you, most of the companies like Google AdSense, they will always tell you, if you don't fill in maybe your tax form, you'll be subjected to 30% by default. So these are standard tax, withholding tax. But now on dividend, it's 30%. So if let's say Apple pays $10 in dividend, then you receive $7, because now the $3 goes to US authority, and you don't need to declare it because it is deducted at the source. Same as the NSE, dividend tax, withholding tax is deducted at source. Who is the source? Registrar. In our case here, US stocks is either registrar or custodian. We'll come to that next time we know how does the dividends. And it is applied automatically. If you notice that NSE, they stopped sending dividend slips for confirmation, because they realized they are of no use. It's just a paper showing you its evidence of tax, but do you declare it? No. So that's why they also stopped giving those papers, because already it has been deducted at the source. It is registrar to pay that tax and declare it out. It's not your responsibility. So that answers the question on tax. And there is no tax on capital gains. Just look at Kenyan laws. CASIB fought for that. I don't think we have a capital gains tax. Until it is introduced, for now there is no tax on the profit of your shares. We talked about revolving the money around different options. That's called reinvesting dividend or compounding. Then there is cashing out dividend, where you receive in form of cash. So which option do you go for? Let's start with reinvesting dividend. You use your dividend to buy more shares, either growth stocks, which you can sell and gain through capital gains, or you still buy dividend stocks and gain more dividends. It grows your investment faster over time because of compounding. It is ideal for long-term investors. So you're using your dividend to buy back stocks. At one point, you'll find even that dividend pays you a salary, pays your medical, the same dividend you're using to reinvest again, and you're left with even more money for your savings. So the more you grow your stocks, dividend stocks, the better. Cashing out dividend means taking it in form of cash. You are paid. You withdraw to your bank. Use it to fund other investment. NSE shares, savings, education. Remember, education is the best thing you can give to yourself or your kid. And it's good for income-focused investors. Why? Buy stocks when you are young, dividend stocks. Accumulate them. When you retire, this dividend now will become your new monthly salary, tax-free. You have seen there are people who have retired a very simple, soft life without any hassles. Most of them, they invested in dividend stocks. They receive money whenever dividends are declared. And remember, these companies declare dividends in different times. So it means if you have shares in NSE, you have shares in global markets, you have a board, fixed income board, you also have money market fund, you also maybe on your own started to invest money through pension for savings. And here I'm not talking about NSSF, I'm talking about voluntary. And also tier 2 for your NSSF, it was contracted to a pension administrator. I'm not talking about NSSF. Let's first forget about NSSF. Let's talk about pension. Because that one you'll be guaranteed when you are leaving. The pension administrator will pay you either as a lump sum or as a drawdown, where you are paid small amount every month. Let's assume it's drawdown. You are paid a portion, and every month now you'll be paid. Now, all these investment in your retire, you might find every month you are getting some income, or even half a month you are getting income. So in a month you are getting 2 payments. And sometimes you're also getting all of them coming in at the same time. So you have money running through your retirement. Key dividend dates, let's explain them. And here I'll compare and contrast NSE with global markets. There's a declaration date, that's when the dividend is announced. They announce the amount, they also announce the eligibility. And if I'm not audible, you let me know. So there is an amount, the dates, different dates, and then the eligibility. Which are these dates? We'll come to them down there. So they declare the amount they will pay per share, and when you are supposed to be eligible. Then the dates of payment and book closure. This is made public through either press release, financial statements, and most of the times it is the regulator who approves these, both global and NSE market. Now we come to book closure. So you have seen declaration date is when they announce. This is mostly on NSE. You will not find it in global markets. This is the time the companies close the registrar temporarily. The register. Register is now the people who are in the shares, the shareholders. They close it temporarily. Now the people who are, or the shareholders who are already in the register that date at the close of the register at 5 p.m., they are the ones who are eligible for the dividend. So the people who have bought shares, even including that day at 5 p.m., the total shares they have is what qualifies for dividend. If you buy after this, it's called X dividend. You have seen some counters, when you're buying, they have an X at the top. Safaricom, then a small X. It means that day they are trading X dividend. So if you buy X dividend at NSE, you'll not receive your dividend. So book closure date at NSE is the cutoff date for dividend eligibility. Now in international market, X dividend dates, it means different. It's one business day before the record date. If record date is today, then ex-dividend date is yesterday. So let me use today as ex-dividend. So if today is ex-dividend, tomorrow is record date, because I need to explain the next step. So today is ex-dividend. So you must own a stock before the ex-dividend date. So it means if I'm to qualify for dividend in global stocks, I needed to have those shares yesterday. Again, we are assuming ex-dividend is the date is today. For you to qualify, it is yesterday. In NSE, ex-dividend date is 1 day after book closure. So again, terminologies, but they mean the same thing. Book closure for international market, they don't call it book closure, but the yesterday, which they are not saying here what it is the book closure. Same as NSE. Ex-dividend date, you don't qualify for dividend. Same thing as international stock. So then we come to record date. This is the date the company reviews the records to confirm who qualifies. That is, they review on ex-dividend date. So for NSE, they after book closure, they review the following day. For global market, it's the same thing, but if it is today, then it means you needed to have those shares yesterday. I hope that is clear, so that you're not confused by these dates. It's the same thing, it's only that in international markets, you find the word ex-dividend. In NSE, you find book closure. So in international market, ex-dividend minus 1 day. So that day is the one you need to have shares. NSE, it's on book closure. Payment day is when they pay you the dividend. International markets, it's credited to your account. NSE, it is paid directly to you via bank or M-Pesa, depending on which mode you selected when opening CDSE account. And this dividend is less withholding tax. So that's just a small highlight. You'll find most of these are there, but in international market, they don't use the word book closure. It's rare. NSE, they are used, but they mean the same thing. Book closure, you need to be on the shares. Ex-dividend date, that's when they validate who is on the record to be paid. Record date is the book closure. That is the date they need all the people to be in the register. Then there is a payment date, the date to receive your payment. So that is on dividend. Now we come that's one way of making money through dividends. We come to the second way. It's called capital gains. Again, in layman's language, capital gains is the profits you make when you sell shares at a higher price that you bought at a lower price. So you buy low, you sell high. That difference in price is your profit. It's what we are calling capital gains. And it is the main way people make money at NSE and global markets, especially in volatile stocks. And you find the prices are moving high. You can sell at a higher price, then buy another stock that have gone down. When it goes up, sell. But that is called speculation. As a long-term investor, long-term investor, you don't need to sell shares. If you are targeting to use them maybe in your retirement or to pass these stocks to your beneficiaries. In the video that I'll be sharing for the Wednesday session, just go through it. You see how you can pass your shares as well to your kids. And you can always start investing with them as early as now. You can open an account for a junior. I went through all that process where your kid starts now to invest. When they reach 18 years, that account automatically now becomes their own. They start trading as an adult. At that point, you can transfer your shares to them, either as gift or if you are not there, as a succession where you need a will, or they go to the court, and they agree on sharing, then the court gives the letters. Then as a broker, we transfer to them. So those are called long-term investor, where you don't want to sell, you're just holding your wealth there. So capital gains, a simple example, you buy raw. So you buy, say Tesla shares, 10 shares at 200. Your cost is roughly 2,000 plus cost, plus charges. Then you sell high later at 280 plus minus now the charges. So your new value, you invested 2,000, you have received 2,800. So your capital gains is 800, then you less charges. There is no tax. That's the amount now you receive as your profit. So the capital gains formula, for those who know mathematics, I've just simplified it. Positive selling price times the number of shares minus buying price times the number of shares. For those who know mathematics, you put bracket, move number of shares because it appears twice. So you have selling price minus buying price times the number of shares minus charges. That is your profit called capital gains. Tracking gains in USD and Kenya shillings. Your gain from global market will always be in USD, as long as they're in the international stock platform and in AIB USD account. You can convert that to Kenya shillings if you want to be paid in that. But then you need to compare what gains you receive in Kenya shillings when that money is eventually sent to you. If you have a USD account, I will always advise you to withdraw to that, so that now you can play with dollar. When dollar goes up, you can convert when you desire. It's the same thing we would have converted and pay you. So if it is in your dollar account, you can convert into your Kenya shillings. Actually, your bank may even give you a better rate. But it is a choice. If you have a USD account, it's a choice. If you don't have a USD account, we can pay you directly to Kenya shillings account. When you're depositing in, it's the same thing. You can deposit directly to our USD from your Kenya shillings account to our USD. You are converting using the rate that your bank have given. We will receive the exact dollars. The other way is where you deposit in our Kenya shillings from your Kenya shillings, then we will convert for you. So those both options are there. Bank accounts are on the link in our website at the global markets. Sorry for that. So the reason why I'm saying this, currency rates may increase or reduce your actual returns depending on whether USD strengthens. If it strengthens, then it means more Kenya shillings, so you gain more. If it weakens, then it means less Kenya shillings. And this is where now you need to be worried. When dollar is an investor, I will tell you for free. If you're investing, if you want to put money in, always be happy when the dollar is dollar against Kenya shilling. If $1 is going down, that is 120, 110, 100, because you convert to a higher amount. When you are being paid, always be happy when the dollar strengthens. That is $1, Kenya shillings is appreciating, let's say 140, 150, 160, because you be paid more. So always look at those factors. So what affects capital gains? First of all, stock prices, because they may move a lot. One, because of company performance, profit, earnings, product launches, they may affect the price either up or down. Global news, we have war that is happening. We have elections in the US. Some counters were very low in price. After Trump took over, they have appreciated, I think, significantly. Tax policies, always check on them. We always ignore reading some of these things, like let's say our finance bill. You ignore reading that bill, but you find there is a clause that is affecting certain company. Be sure the price will be affected. And those are the things you check so that you know Is it the right time to get in, or is it the right time to get out? Because if it is a tax policy that will affect that company forever, be sure that price will go down. There is also local politics. Look at counters like Mumias. It was affected by local politics. Then, is it even trading today? Would you even be willing to buy if it was trading? Look at KPLC. Sometime back, there was a lot of politics. Price went and stagnated. Then I don't know what happened this year. Price have shot up 8 times. Look at Eveready. Product, I think I've said product diversification somewhere. They failed to look at the technology and innovate. What happened? They were left with the Eveready batteries and other products, which already they have been overtaken. We have chargeable phones, their battery, I think you can never go and buy outside. The same way we do for torch. Torch these days, they come with chargeable. Radios, you have electricity. Some of them come with solar. And that's how some companies like Eveready roast in stock market. But if they were to innovate and come up with a new product, you see the price strike up. Those are the things you check. Well, they are called penny stocks. To me, they are not penny stocks. If they get a new innovation, price will shoot. If they get support from government, they develop, let's say, they're the ones now developing batteries maybe for cars. Right now we have electric vehicles. They need batteries. If they were to innovate and start making those batteries, when we start buying those electric vehicles, when the battery breaks down, you need a battery. You don't need to import. You buy from Eveready. You find the price goes up. So those are the things you need to check. What are those companies doing? Even international market is the same thing. You need to check. Meta. They had Facebook initially. They acquired Instagram. They have brought Threads. They acquired WhatsApp. You can see these are companies that is growing. And with all these platforms, you can see they are stable. With AI coming in, we thought it would bring them down. They have incorporated AI in their product. Google, the same thing. We thought it to go down. You'd just go to AI and chat. Right now, even from Google, you can request. They incorporated AI, meaning the more you innovate, the prices. Those are the things now you check, because they are the ones which affect your capital gains. As a good investor, for news, do your research and know the right time to buy and sell. Sell only when it is profitable or you vote for the future. Before we come to this, if there is any question, put on the chat. Let's come to a good example here. The war between Iran and Israel. We may think it doesn't affect us because it's not our content. It's not our continent that is affected. We are in Africa, therefore. That war cannot escalate to us. But then it affects you in the capital markets, whether it is global markets or NSE. Why? Global stocks or markets may react with volatility. Why? We as investors, we always discuss this politics outside. You panic, you all want to sell. You push prices down. Then another country, they get excited. This is the time we are investing. They want to buy. They push the prices up. So investor sentiment, they affect the prices. And at this point, you may find other people now shifting from these global markets to other products. So you find there is no supply and for shares or even demand, which affect the prices. So you may find the prices now starting to fall, especially now with the war in Iran. It may affect the prices and you might see prices go down, not because US are getting in or Russia are getting in, no. So it's affecting other sectors. Remember war, Iran, I think they are good in oil. So if it is affected, then you can tell sectors like transport will be affected. Airlines, there will be instability. People thinking they might be attacked. So it affects now aviation. Defense, every country want to defend themselves. So, but that does not mean it affects the whole market. There are other sectors that gain. When there is war, as I said when we are starting, 1 month's predicament is another month's cake. Huh? So my predicament today could be a cake to maybe somebody is offering loan. You see, they have seen an opportunity. I don't have money, they loan to me. So even in stock market, it happens. There are sectors that you gain, like defense and arms manufacturers, gold and precious metals, energy companies, like oil producers, they would gain. Because even these people who are fighting, they also need oil to fuel their machineries. So those are the sectors now you start looking at. You see if they are improving in price. By that time, they are wrong. When the war is about to end, because that will always be announced, exit. Because once the war ends, it means those sectors no longer gain. Prices now are just downwards. And other sectors which are affected will start to rise. What do? You move your money from these sectors, you go to the sectors that were affected, they will start rising, and you make your capital gain. So you are gaining every time. Huh? So the sectors that may fall, one of them, as we have said, is airline, oil cost, and travel disruptions. Huh? Tourism, because people won't move a lot, because they don't know what will happen. You have seen Trump saying they might offer support to Iran. Then when they are saying that, another company like Russia comes and says, if they get in, even as you get in. China says the same. It brings in instability affecting tourism. So you find shares that are listed at the tourism sector, they'll be affected. Huh? Then imagine markets like African markets. Huh? So I don't want to go into details of this. Again, oil prices likely to surge. Iran being the major oil producer. Prices go up. It will affect transport, food, and manufacturing costs. Again, there are shares that are listed within those sectors, they will be affected. Inflation also affects the world. Interest rates will hike. So you find it affects most of the sectors. And that means if the stock market is affected, interest rates have improved. What does that signal? Fixed income, a sector to get in. Because now interest rates are high, you'll be paid high. Money market funds interest. So you play around with the market that way. When one sector is affected, look where the effects may have positive effect. You go there. Again, I don't want to go into details of this because it takes time. So what can you do for capital gains? Stay diversified. Don't keep money in just one asset. Don't keep on buying Safaricom shares, unless you want to become a majority shareholder in Safaricom. Diversify. Even in international market, don't put your money in Nvidia. What happens if Nvidia price goes down? You are stuck. Diversify. Buy Nvidia, Apple, come to NSE, buy some other stocks. Buy our boards. Our boards dealing team are always ready to assist. Put money in other savings products so that you have diversified your investment. Secondly, make sure you have some secure assets that you know cannot be affected significantly. Government bonds, gold, or you put money in USD. That always follow credible news. You know, social media, everybody is a reporter. Always check credible news and avoid panic selling. If you hold shares, avoid panic selling because you push prices down. Then consider sectors that are likely to benefit. As I said, once man predicament is another man's meat. If there is war in Iran, you look which sectors are gaining. If there are elections in US, Of course, there are sectors which are gaining. So you check for that and push your money there. Buy low, exit high. And when those sectors are being affected and the prices are going down, at one time, it will reverse up. So buy when it is low, sell when high. And when investing internationally, very important, monitor currency, USD versus Kenya shilling, so that you don't lose. And with that, now we go to Q&A. Let me first check something here. I need to see. Okay. So we go through quickly the questions I did not tackled. Let me scroll up. And if you have question now, it's time to put on chat. For Q&A, I'll also come to that. So on taxes, how do you apply for foreign dividend? I think I've explained. It's only withholding tax deducted at source. You don't even need to be worried. You only need to be worried about the amount you are receiving, not what you are paying out. Is there a way to auto-invest dividend? Both the international market and NSE, you need to place order manually. For international market, remember you have not been paid. It is in your investment account. It is you to decide whether to buy more shares or withdraw. For NSE, you have been paid. You just deposit back. But you are working with the regulator to see if it can be sent to your brokerage account you invest. At the ETFs, what is the quantity of each share of the company involved? There is no specific quantity. ETF, as I said, it's a collection of different shares you are buying as one unit. It is the people who are creating that ETF who determines what the makeup of the shares inside. You don't need to be worried because it doesn't affect you. And actually, it is an advantage to you, as we said. You can buy a high-valued counter at a lower price. But again, the downside of it is that you can buy a low-valued counter at a higher price. But remember, it is averaging. You are buying one unit of ETF. What is inside, you don't need to worry about. But when you are doing research, that's when now you start considering what is inside there. As I said, ETF is like a bucket. Inside that bucket, you have oranges, bananas, carrots. What else can we put? Cabbages, onions, and some piri-piris as one. Otherwise, you'd have bought each on its own. So if you're buying onion at 20, you buy it at 20. If piri-piri, you're buying it at 1 bob, you're buying it at 1 bob. So you incur 21 bob. But in this package, the seller can decide, let me put tomato for 20 inside and a piri-piri for 21, then average this. It is 21 divided by 2, you're buying at 11. So piri-piri, you're buying at, yes, 11, but remember the same tomato which was going for 20, the price have gone down to 11. So you're buying as a package, not as an individual. You only need to be worried about the makeup of what is inside that ETF if you're doing your own research. Is there a platform or application where investors will buy ETFs directly? On DigiTrader, it will come. But for now, the orders we are receiving via email or through call. Is it a must you talk to your local broker? The broker will only come in if you need any research advice and when you're placing order. Otherwise, if you have the quantity and the price you need, just send email, we'll execute the trade for you. How come we don't have ETFs? In NSE, I think they were there. I may need to check. In the next presentation, I'll check whether they are still there. But the reason is we only have, I think, is it around 50 counters which are actively trading. In international markets, you have over 1,000 shares. 1,000 plus, so they are able to package. In NSE, unfortunately, I don't think it will even make sense. In NSE, it might not make that big sense unless NSE starts to value their shares in USD. And there are also many companies to list. You have seen, I think the last successful IPO I will talk about was Safaricom. How many years? We have never had any other company that is very successful that you can point and say, this is making money at NSE. But once they come, as the broker will let you know. Market makers, you are attaching your balance sheets. When you hear about market maker, they are putting in their money or they are putting in their assets to start on behalf. If assets here is the stocks, they are floating their stocks to be sold, or they are giving their money to buy shares, so that there is that buy and sell orders. You are able to put your orders and execute. Some time back, I don't want to disclose more information. We wanted to do 24-hour trading, but we realized from 3 to the following day, working day 9, somebody needs to provide shares and cash for settlement. So that somebody who is supposed to provide this is the one who is called market maker. I hope it is clear on market maker so that you understand why in Kenya it's not possible. I don't think any company would want to attach their balance sheet, especially in a stock where, first of all, the investors themselves, we are not willing to pay extra cost. And it doesn't make a huge profit. Because for them, remember, they are attaching cash they would have used elsewhere. Assets that they would have put somewhere else. But as the market grows, maybe over time, NSE might innovate around that and start providing now that market making. Market makers, I think, right now in Kenya, it's only in derivatives. Is there a constant price for shares of EFTs? Like, what is the price of one share of ETF? ETF, they trade like shares, the normal shares. They assigned a price, let's say 140. That price may go up or down, so it's not fixed. It also fluctuates because the assets inside, they're also fluctuating. The price inside of the stocks is the one that is averaged. You're given as one price. So any change inside there will also move the price outside, the average price. I hope that is clear. If it's not clear, put the question again there down. As I said, many shares inside, the different prices, their prices are still moving. So even the average is also moving. It's not a fixed price. Difference between ETF, I'll come to that. Let me first pick the others. So ETF, index fund, let me note it. Index fund, ETF question, so that we explain in Rayman. Let me go back. So Esther, just hold on. I first cover the other questions. Is there an ETF that offer dividend on monthly basis? The dividend are paid as declared by the company that is inside that ETF when they are paid. When they are paid, that's when you get your dividend out. ETF is a collection of many companies. It's not one company. So you have some companies within that ETF and declaring dividend and others don't declare. So remember this dividend will be paid to you on the payment day. So dividends are not paid monthly, it's as declared. Is there a minimum amount required to invest in global markets? ETFs and shares, we have set the same amount. We are starting with 100,000 because we are dealing with the actual shares. When you go to physical shares, fractional shares, there will be no minimum. With fractional, you can buy a fraction of share. But for the physical shares, we are starting with 100,000 Kenya shillings, not USD. Kenya shillings. ETFs and shares, they trade the same way. 1 unit times the price. The same thing. It's only the terminologies. Share, you are buying one company, a unit of a company. ETF, you are buying 1 unit for many companies. Trading doesn't change. Does one Does one select the specific company that want in their ETFs, or the companies are already grouped? It's not you who do that. Is there maximum number of companies to be in ETF? It depends on the setting that have been done for the ETF. It is the exchange that does that. The exchange that is offering those shares. They're the ones who decide which shares are within that ETF. It's not you as the investor. Derivatives, we stopped, Jacob. We are in the process of clearing the payments that have not been forwarded. If you have not been paid, just reach out. But there are reasons why we stopped. But we'll be coming back soon. Derivatives, again, I don't think it's very active in NSE. And again, you need to know everything on derivatives. William Amber, please put on the chat. Put question on the chat. Do you accept remit orders? Yes, remit orders are orders that you say, buy for me at this price. And if you don't know the price, you can tell me, just buy me these shares. Those are called market orders. So for both global and local NSE, all options I've said here are there. Market orders, remit. Remit is where you give us your price. Actually, we are very happy when you tell us a price. Otherwise, if you don't know the price, you could just tell us to buy these units at market. But remember, at market, yes, you get execution, but the price might be high. What's the difference between bid and ask? Bid are people who are buying. They are bidding. You see the way you bid in auction, you say, I want to buy this at this, I want to buy this at this. It's the same thing. They are buyers. Ask is the people who are selling. They're asking you to pay that price. It's only the terminologies. Never be worried about this terminology. That's why in AIB-AXYS, we always break these terminologies down. Bid, demand means the same thing. Offer and supply and ask mean the same thing. So if you find them, don't be worried. Offer, supply, and ask. Those mean the same thing. People who are selling. Bid, then there is a demand, and buyers means the same thing. These are people who are willing to buy shares. And thanks for asking that. We always break down terminologies. If I want to invest in ETFs, how do I start? You just open the normal international stock trade. You open our account. Just go to our website, Global Markets. There is that link. You download our account opening form and W8BN form. And there is a video shared on our group that talks about how you open account. After that, the same way you issue instructions on shares is the same way you buy ETFs. You only need to know which ETFs are on offer. And there are so many sites out there where now you can track those the performance of those ETFs. If you are to Google ETFs in NASDAQ or New York Exchange, NYS, they will be listed. Now you can decide on which one you want to buy. I think for slides, those ones I did. I hope you have seen up to the end. Just confirm you can see Q&A so that I know we were together. Just confirm on the chat. Anyone with a link to this class? I think Meg, you're already in. If I'm not sure, you must be in. If you can chat, you should have joined. I wanted to ask if someone has the CDS account and want to invest, how do I register? Just if your account is not fully updated, just update. Then you fill in W8BN form. It's the same account you are using. Let me give you my email address. You can reach out. I forgot to give before most of you dropped. Let me type it correctly. AIB. Then my WhatsApp number. It's there. And there is a WhatsApp channel. Let me get that link. Well, I'll be sharing this. It's not on AIB-AXYS WhatsApp channel, because that one I want to go into layman explanation. I don't want to go technical. I don't want to lose you as the investor. There I'll be explaining everything in simple terms. Very layman, beginner friendly. So let me check. The other question, would prices on different exchanges be different for the same counter? I believe it could be for one reason, something called spread. And this spread is different from what I explained. Spread in form of some exchanges, they add a markup on the costs. So if the price they are giving you is inclusive of the cost, so you find you are paying more. So always check the exchange you are trading, even the broker you are trading with. Always confirm the price you can see on websites is the same price they are giving. If there is a difference, know within the price there is a cost you are paying, which most of brokers don't disclose. You have heard people say you can trade with us for zero commission. There is nothing called zero commission. Check the price. That's where the cost is. I hope that is clear. When you check the price, you realize you are paying more than what you should get in the market. So if you see there is a difference in price, know that price has a markup. So always check. So to answer your question, the prices may be different, but for one reason, that markup that have been put by the broker or exchange. In global markets, can you leverage? Yes, you can, but for us, we are not doing leverage trading. And this mostly happens in CFDs. CFDs you do on leverage, but always check. As I explained in the previous session, which you can find the video in the WhatsApp channel I've posted there. You can follow that WhatsApp channel. You know the difference between leverage and non-leverage. In NSE, it's fully non-leveraged. In the offering we have for international stocks, same thing. Leverage, for those who don't know, you are buying on margin. Margin means you have been given some credit or loan by the broker to buy shares, but you pay an additional fee. So you have not put in money, you have only put a small amount. Then they allow you to buy, let's say you have put 10,000, they allow you to buy shares up to 100,000, but you pay some cost on these 90,000, is it 99,000 or something? You pay a cost. The downside of it, if you lose that money, you still pay it. So it eats even into your deposit. It's very risky. On the sell side, it's where you are selling shares that you don't have. It's called shorting. Shorting the market, short selling. It's not allowed because again, you're selling the shares you don't have. The person you're selling to, the custodian, must provide those shares. What if you're not in a position to provide those shares? It means there is a problem somewhere. Either they do SLB, security trading and borrowing. You go to the market, you yourself borrow, provide those shares, then you return the shares to the person you have borrowed. You get that shares from where you'll be forced to buy shares in the market and put in. So it's that risky. It requires first you understand the effects of leveraging. Once you understand, now you can do it comfortably. It is the most profitable way you can make money in the stock markets, but very risky. You have seen, let me give you a good example. When you're coming to Westlands from Thika Road, there is a billboard that tells you 75% of accounts in CFD, they lose money. They didn't put there. They didn't put there without a reason. They know, and that's why most those brokers, they don't allow you to put orders directly to them. Because if you lose, you'll blame them. That's why they give you platform, because the responsibility now lies with you. Why do shares reflect after 2 days? Reflecting should be the same day, but selling you can only sell. In international market, it's after 2 days, because that's when settlement happens. In CDSE, you can only sell on the 4th day because they settle on that day. I know what you're asking. You may have done intraday. Intraday is where you buy and sell the same counter, same day. In CDSE, they settle differently. CDSE system doesn't know you are buying or selling what you bought. The buy side has to settle and sell side has to settle individually. When they settle, the net position is what CDSE will give the broker to show you. That's why they reflect now after 2 days. I hope now you're asking in respect to that. That is on NSE. In international markets, no. When will you cover day trading? Actually, in the training I did Wednesday, I went through. Next Wednesday, I'm covering NSE. Again, I would go through day trading, again in details. And that video I'll post on our YouTube channel and share on that WhatsApp channel I've shared down there. Examples of companies that offer additional shares or bonus instead of dividend in Kenya. Right now, we have not had for some time, but whenever you see a company announcing a bonus issue, those are bonus shares. Always check price list. For a long time, most of them, they either give dividend in form of cash, or they transform to growth stocks. We said growth stocks, they don't pay dividend. They reinvest that dividend, but the prices continue moving up. For US residents, what is the tax rate for dividend? That one I'm not sure. But if you're Kenyan residents in the US, but holding a Kenyan passport, you are tied to the same 30%. It is your passport that it determines. If you have a US passport, then on our side, unfortunately, we are not onboarding foreigners because of tax issues until it is resolved by our legal team. We see how we can move around it. We don't want to expose our clients to tax claims. What is the minimum number of shares one can buy in each market? In international market, you can buy from one share, number one times the price. In NSE, you have an option of buying in multiples of 100. So you buy 100 shares minimum, going up 200, 300. But there is also another board called ODD. You can buy one share to 99. That is the difference between NSE and international market. International markets, from one share upward, no minimum. NSE, one share to 99, you buy at the ODD. In multiples of 100, you buy at the normal. If you want to buy mix of two, you buy the multiples of 100 in normal, then the balance in ODD. But ODD, you are not guaranteed because there is usually no liquidity. So you need to check that. Which foreign stock exchanges do you offer? There are many, but as part of it, we have NASDAQ, we have New York, and many others. Just let me know on the number or on the email. YouTube link, just join that WhatsApp channel, Caroline. But let me also share it here. There is no harm. Let me just get that. Let me get that so that sorry for that. I was copying the link. And that's a different YouTube channel because I want to do things in layman. So I'll be posting everything there in layman language, breaking everything to a way you can understand. Where were we? YouTube. Okay. How do I decide when it is high enough to sell? It is a profit that you make. The profit that is shown on your broker account. If you are willing to take that profit, you can sell. But don't sell if it is a dividend stock or if you're investing long term. And if you're selling, sell to buy another account and not to withdraw money. Again, sell to invest, not to withdraw. Can you explain again on demand on supply in relation to stock price. I hope you mean the demand and supply effects. So demand is the people who are buying, supply the people who are selling. The higher the demand, it means there are many people willing to buy those shares. The overshoot supply, the price goes up. The same thing, you have so many willing to sell, supply, but there are few people willing to buy, price goes down. Same thing, go to market. There is traffic for people who want to buy, say, tomatoes, but there are no many tomatoes. Because there is that willingness to buy, suppliers will push that price up. However, if you go to a market and there are so many suppliers for tomatoes, but there are few people buying, remember these suppliers, they are competing for these buyers, they'll push the prices down. It's the same thing now in an NSE. Brokers that offer global stocks, I may not know the others in Kenya, but AIB, I know we are offering. And I'm not hiding this from you. I'm not sure whether there is any local broker. And I'm talking about local broker, not an international broker who have a office in Kenya. I'm talking a local broker. You can walk into office and ask questions. Regulated by CMA. We are regulated on both products by CMA. What is the tax implications? Capital gains. There is no capital gains that I said, both local and international. It's only on dividend. You don't need to worry. Deducted at source. For international markets, it's 30% with the holding tax. For local NSE, it's 5%. But difference is the 5% is on cash, Kenya shillings. 30% is on USD. But don't worry, you don't need to worry about. There's nothing you're declaring. It's deducted at the source. The person who is supposed to declare is the registrar or custodian who deducted. I haven't received my dividend from Cooper so far. I bought before book closure. How? Oh, this one you can talk to registrar. Just go to our website. You see the list of registrars, or you can get in touch with me on my WhatsApp number. I can share the number for registrar. If it is local stocks, then you can talk to them. They will actually tell you whether there is an issue with your number. That is, the number is not registered to you. It is registered maybe to your relative, or the ID you have used is not yours. If it is bank, there could be some maybe mistake, and you only need now to talk to the broker to amend. And as you talk to registrar, you tell them now to the issue to the new number that you want to be listed, but make sure you update it on the broker side. That you just write a small letter and send via email. How do you tell when it's good time to sell? It all goes with the profit. Whether if you're looking at growth stocks where they appreciate, you sell and buy something else. When you make enough profit, sell, buy now a low valued counter. When it appreciates, sell, buy another one. But don't withdraw. How can I change my receiving bank account in CDSE? Just go to our website. There is an email info, and there is also feedback. Send email there with a CDSE number. They'll check the documents you need to share, because you might have shared some time back, and you only need to fill in your account opening form. But if it is fully compliant, they'll just activate. And it's not CDSE, it is internal account. Thank you for this informative overview of investing in global markets in Kenya, Peter. Thank you so much, Andrew. I appreciate. And for the rest, I also appreciate your time. How do we get started in investing in ETFs and index fund? For ETFs, it's the same thing as international shares. You only need to let us know you have intentions to invest. You have from the minimum 100,000 or more. Fill in the W8BN form. We receive your money and you said in orders. There is nothing special about that. Then know the ETF and where it is trading. Set that order. I will come to index further. Let me first pick the questions quickly. Is security-based trading acknowledged in Kenya? Yes, we have SLB, security trading and borrowing. I covered it on Wednesday. So that video I will share over the weekend, have everything on NSE. Follow that channel, I've shared the link there. I'll have taken you through SLB, how it works, where you're reading somebody your share, they go and use, then pay you interest. They will put in a collateral at CDSC. If they default, that collateral goes. Dividend is paid to the person who have borrowed. They should not use that dividend because eventually they pay it back to you when they are returning shares, irrespective of how many years they have held your shares. Any corporate action declared during that period will come back to you as the render. But in Kenya, I don't think, we always copy what other markets are doing. In other markets, there was a question on leverage. That's where SLB comes in. You sell shares you don't have, borrow to settle. Then once you make money, you buy shares back in the market, return SLB, pay interest, but you have gained through capital gains. In Kenya, I don't think there is such a scenario. Unless you want to take a loan in the bank and you don't have shares immediately, you can come and borrow. Shares are moved to your account the same day, take loan. When you clear loan, shares are released, return to the investor, pay the interest, and any corporate action. That's the only scenario I can see in Kenya. Otherwise, there is no other scenario. From where I sit, NSE SLB is not that. I don't see the other reason, because derivatives, you can't use them. We don't short the market. It's not yet there. But international markets, that's the purpose of SLB. Do you give reviews on ETFs on daily whispers? I'll talk to our team. Initially, they were starting with stocks, but I'll also ask them to include ETFs. Do you know which websites some foreigners use to track shares? Yes. There is Yahoo, Finance, and there are also other links. I will share on that WhatsApp channel. Just follow that WhatsApp channel. I will share all the links together with other additional materials, and also a blog I'm working on now specifically on these products, NSE and international markets and other investment boards in layman language. So be on that channel, WhatsApp channel. There's also a Telegram channel where now I've also allowed discussion. For AIB, we stopped allowing you to comment. I will also be sharing that link in that WhatsApp channel so that at least we can also have feedback from you on what you need. Is there a timeline we can expect for EFT to come to DigiTrader? We are working on it maybe in August, September. We are still developing. But for now, you can buy directly through our team. It's the same way NSE started. It started with you sending orders. Then eventually we went digital. I wanted to ask if I have CDSC account, how do I get in? It's the same account. Just make sure it is fully updated. You can get in touch through my WhatsApp number or email. I can check for you. What do you have? Swap ETF. This one I can check for you. Just get in touch with me. I can check in the platform and share. Where can we get a list of ETFs available on AIB? I think this is a good question. I have seen this question is featuring a lot. I'll share it on our website. I will ask our research team to also share on our respective groups. Also on that WhatsApp channel, I'll share that. What is derivatives? Let me first tackle the other questions. I'll come to derivatives together with index funds, because I want to release those who already know derivatives. Then we can tackle those who know international stocks, so that now I can come to that. I did talk about stocks, NSE 100. This one I can cover next week, because these are ETFs we are talking about. While the withholding tax is deducted at the source, do you pay again while receiving? No. You receive money directly, you don't pay anything else. There is no double taxation. It's paid by the registrar, you don't pay anything. Can you explain how interest goes up during economic crisis? This, I think it's more of a research question. It can be tackled next time. I'll also ask our team to share on the groups. Do you have any other Africa or markets other than US? Yes, we have Mauritius, where you can go through our parent company, that is Access Group. There are some funds they offer. There is a Axiom Africa fund. You can get them on our website. If you're interested, just get in touch with me. Then I will connect you with our team that is dealing with Access funds. On Wednesday, it will be 12 p.m. to 2 p.m. tackling NSE. I will share the link on all our social media, including this WhatsApp channel. So Wednesday is NSE, Friday is international markets. What international regulation should I know about when trading global markets? Nothing, because AIB is the one which is exposed, not you as the client. You don't need to be worried about anything. I think we have made your work easy. You are only worried about your investment, putting in money, buying stocks, to tracking them. The AIB is the one which is handling the other hassles. I don't want to go disclose a lot of information, because again, even the AIB is not even worried, because we are dealing with a partner that is fully regulated, both locally and internationally, so nothing to worry about. Can I buy infrastructure bots from your site if they are listed at CDSC, at NSE trading platform? Yes. If not, then you need to buy directly from our team. And most of the bots, they don't trade on the NSE platform. So you have to go through our bots team. Thanks. This was fantastic. Thank you so much. I saw that Dove funds offer international stocks. Are they certified? I don't want to talk about them because that's a separate platform. But for AIB, fully regulated, fully protected. Both parties, ourselves and the one we are executing through the international broker, fully regulated by CMA. So for Dovu, I may not know. Thank you, Ben. Thank you, Sharon. You have shared your number during previous webinar. I got it wrong. Let me reshare 0723384775. WhatsApp and Telegram, and even calls, SMS. The other question, okay, very informative, Radio. Thank you. Contact for your board's team. Just get in touch with my number. I will share. I will get their number. We have different teams. Just use my number. I will connect you with them. Today's session, just join that WhatsApp. Follow that WhatsApp channel. Sorry. Also follow our social media. Our other WhatsApp channels, it will be shared there across. I will share today's video as it is. And again, as I said, on that WhatsApp channel, I will share a link to the Telegram channel, not group. All these are channels. On Telegram channel, I've enabled commenting, where now we can have some discussion going on 24 hours. I want us as investors, we help each other to understand the market. That is the essence of these trades, trainings. You understand the market, you understand what you're getting into, you understand what you start to gain, the opportunities that are there, not just in AIB-AXYS, also outside there, and utilize all of them to make money. Pascaline, thank you so much. Sorry, we'll get in touch offline. I think for those people who are trying to transfer funds, there are some banks which have an issue. You may need to walk there and do manual transfer. But there are those which you can do online transfers. If it persists, I have friends who are in those banks. We can always ask what is happening. So for those who have had challenges with transfers, just walk to your bank, transfer. And there is no hurry in investment. Remember, we are not buying to sell. We are buying to invest and pass that wealth to our children. And one thing I said on Wednesday, start introducing your children to your investment. Let them know you're investing in CDSC. That's where eventually, if you're not there, that's where they will go and know which shares you had and which broker. Start introducing them. They know mom or dad have shares in CDSE. In case of anything, that's where they can go. I can see something on Q&A. I hope it's not a rot. Oh, it's only 2. While the withholding tax, I think this is what I explained. I wanted to know if one have a CDS. It's the same account. Huh? We are not changing anything. Let me see time. We still have 13 minutes. Any other question? Any other question? Any other question? And as I said, there is a blog and also YouTube channel and WhatsApp channel and Telegram channel where now will be posting these things in layman's language, simple language, without terminologies. If there is terminology, I explain it so that you understand investment. And those channels will be active 24/7. Huh? They are not closed at all. You see information trickling in. Huh? Now we come to index funds. Huh? This is a type of investment, either a mutual fund or exchange or ETF, huh? Designed to track performance of specific market index. Huh? The other one for ETF, we have said it tracks shares. Huh? This is specific market index. Huh? So it's a basket, just like ETF, of many stocks, huh? Where funds try to copy an index like S&P 500. It could be NSE 20 or NASDAQ, huh? By holding all of the stock in that index. Maybe in the next presentation, I will come and explain in details. But as an example, if you invest in S&P 500 index fund, that fund buys all 500 companies. Remember ETF, you don't know what is there. Unless now you go into it and research. So it has all 500 companies in S&P 500 in the same proportion. So if it is one Apple, it is one Apple, one Microsoft, one, like that. Huh? If it grows by, let's say, 10%, your growth, your investment now grows with the same amount. Huh? Of course, you have to raise fees. Huh? It's not like an ETF where it is there are different stocks there, not in the same proportion. Huh? So you get your returns through capital gains and dividends. Huh? So I hope that is clear. If it's not clear, then you can let me know so that on my number, so that next time I go into details. Huh? Now, derivatives, it's a financial contract which value is based on the price of a underlying asset. Huh? It could be a stock, a commodity, currency, or a bond, or even an index. Huh? So it's like you are betting on price. On price of that asset will go up, will move in future. It's like CFD. CFD, when you buy, you are speculating on price of a stock, whether it will go up or down. You're not owning that stock. CFD, you don't own a stock. You buy a CFD of a stock, but you're speculating. So you buy today, when price goes up, you sell, but you don't get dividend. So derivatives is the same. It's like you're betting on the price of the underlying asset that it will move in future without actually owning that share. Like if you're in NSE and you're buying a derivatives, let's say for Safaricom, the ones which are listed there, you are speculating that Safaricom's price will move up in future. So you're buying low, then you can sell when it moves up. Huh? So mostly it's for speculation. You speculate on price, you hedge risks, and you gain exposure to the assets without actually owning them. Huh? CFDs and derivatives, they have high rewards, but very high risks. Huh? Very high risks. If you watch the video that I post over the weekend, you will actually realize why. Because you're trading on leverage. on margin, and you can easily lose even your deposit. That's why on my side, I usually train mostly on physical stocks, because you can't lose unless that stock de-risks. And when it de-risks, the regulator will tell you what to do. And there are many types of derivatives. There is futures, there is options, forwards, and swaps. I don't want to go into details. Mostly me, I'm a technical person, IT, but don't worry about those terminologies. We'll still try and break them down. Any other question? Let me see. I think the last one was where I've shared my number. Derivatives at least I've touched, but you can wait for that recording on Sunday. But over the weekend, I'll share some few blog posts now with these details, which you can read over on your free time. If not previously shared, please share the dividend stocks on NSE. You can check our stock recommendation, it is there, but also on the group, on the channels, WhatsApp and Telegram. I'll also try and share them, so that if you have any question on any of them, you can let me know on my number. Do you have Kenya ETFs, which we can purchase on AIB? NSE, I'm not sure whether we have. Let me just check whether we have any. Let me see if we have any. Because NSE have very limited. One of them is ABSA New Gold ETF. But again, the problem with this is not an ETF per se, because it's tracking price of gold. It's not shares which, it's not tracking shares which are listed inside. This for gold. You can get it in DigiTrader. It's called gold. Code is GLD. I think that's the only one I've seen. I don't see any other. That's why we have brought in international stocks, so that you have different options to invest in. I don't know whether there is any other question. Any other question? Any other question? You can put on the chat, because that's where I'm checking. Can't see any other question. I think we have a few more minutes. I don't know whether there is any other question. You can put on the chat. If there is no other question, thank you so much for coming today. We value your time, and also we protect your investments. And your investments, they are protected by CMA. CMA is the regulator. Anything, any issue you have with any broker, not just AIB, just rush to CMA. NSE are the ones who provide trading platform, but they regulate derivatives. CDSE are the ones who holds NSE shares. So your shares are in CDSE. They are not held by the broker. Your cash, however, is with the broker. So never leave your cash with the broker. Buy shares. If the broker goes down with your cash, you lose it. If they go down with your shares will just move from the broker to another broker. So always put your money in the broker, in shares form. In international market, your funds and shares are with the custodian. So that's how it works. NSE shares, we have registrar. They are the ones who deal with the dividends and AGMs. And if you have shares, you have right to attend any AGM. Do everything that will be done in that AGM meeting if it is physical. Yeah, and you have voting rights. The reason why you find some people buying more shares for us counter, like what Didinyoro did with KPLC. He wanted to get majority shareholding in KPLC, where you have an upper hand and a direct say in that company. So thank you so much. Let's meet next Wednesday. Be on the lookout for the posters. And we are progressing where we started with the introduction. Today we have gone into details. Even as Friday now, last Wednesday, we went into details of NSE trading, which I will repeat next week, because NSE is straightforward. For international markets now, next week, we go into now deeper details from what we have learned today. Index funds, ETFs, and stocks, how you can trade them. And sites that you can use to track, and also how to interpret those graphs. When we are interpreting graphs, there are 3 different graphs I'll go through. One of them is actual stocks and ETFs. Then there is a graph for CFDs, then graph for Forex. So that you don't see a platform out there, you think it is for stocks, then it misreads you. Then could be that time you are following Forex. When you get to markets, it's the opposite. So I'll take you through next Friday. All recordings I will upload and share. So with that, receive much greetings from AIB, and thank you so much. Bye and have a nice weekend.